Hey everyone, it's Tdawg here at Tdawg Trading. Thanks for making me part of your day. I really appreciate the support. In today's video, I'm going to be going through order execution and how to get the most from your broker. This is part of my How to Day Trade series, and I hope you enjoy it. Let's jump into it. Okay, good day everyone. I wanted to take this opportunity to walk you through pretty much order executions on equities and stocks. So, this is the Trade Zero Pro platform. I'm going to kind of walk you through, 5 of the main, order execution types. And I'm mainly doing this because I get a lot of feedback, we'll get questions in chat and different things of that nature. And there are certain elements that I'm aware of, within the platforms that I use, not necessarily on a regular basis, but under certain conditions, and possibly others just haven't come across those conditions. So I just thought I would do kind of a quick video, a quick overview of as to how to utilize these different order execution types. So I'm going to first start out with market orders. Now, market orders is probably one that everyone is familiar with. A market order is essentially, you identify the stock, you put the symbol in here, you identify the quantity that you want to buy, and then or sell, or short, depending on the circumstance. But if you're wanting to buy 1,000 shares at the best rate possible, at the best rate that your broker can get you at that time, then you can send that order in. Now, the huge advantage to doing a market order is you're pretty much guaranteed to be filled. So if it's critically important to you that you get your entire order filled, 1,000 shares, 500 shares, 10,000 shares, whatever that quantity is, when that's more important than the price that you get filled at, then a market order is a great option. On stocks like AMD, on stocks like Apple, very highly liquid stocks that trade fairly tight. Market orders are sometimes the easiest way to get in and out of positions. I don't do a whole lot of trading shares with these types of stocks, but if I was trading shares on AMD, if I was trading shares on Apple, I would most likely be getting in and out through market orders. Now, the disadvantage of market orders is the opportunity for slippage. Yes, you get all of your order filled, but you might not get the most favorable rate. So right now we're sitting there hovering between 80, 79, 78. Likelihood in a stock that's this tight, when you do a market order, you're likely going to get on a buy, you're likely going to get filled on the ask. Now you might, on the nice things about a market order is that you might get filled in the middle. So if the ask is at 85.80 and the bid is at 85.79, you might get filled at 85.796. So as an average, that's a possibility when you're going with a market order. Simple as you selecting the quantity, you having it here, and then clicking the buy button. The broker is going to handle everything else, and then you'll get filled. You're guaranteed to get filled, and you'll get filled at the best price that your broker can provide. So the next scenario is limit orders, right? So if I select a limit order LMT here, I want 2,000 shares. I have to identify the price limit. So right now it's sitting there. We're on AMD. It's at 85.80 or 85.89. If I want to, let's say I'm watching it and I want to do 85.90. So right now it's about 3 to 4 cents below my price. So what's going to happen is if I were to hit the buy button here, it would feel at the best price possible, but it wouldn't feel any higher than 85.90. It would be capped on a buy. It's going to be capped at that limit is going to be the limit in which you would buy for. And on a sell, it's going to be the lowest you're going to be willing to sell for. So that's the, when you're setting up a limit order, so in this particular case, let's say I want to buy when it gets down to, let's say 77. So I click buy, and it's, right now it's 3 cents above that. So, or 4 cents above that. There's no way I'm going to get filled until it comes down there. And so that's going to be representative of a limit order. Now, this is the Trade Zero platform, so you have a couple of different ways to do your order entry. You have your basic simple order entry mechanism, which it's just as simple as you putting the stock in there. Let's put Tesla in there. It's trading. It's about 735.60 right now. And let's say I wanted to do it at 735.75, and I wanted to buy. It would again give me the best price between right now the 75.58 and that of 75, right? So that's, again, very simple from an order execution standpoint. You select the number of shares. On a limit, you have essentially four things that you have to quantify. Outside of your time in force and your routing, I'm kind of leaving that because this is handled a little bit differently by each broker. But, the key elements on a limit order is the stock identification, the quantity, the fact that you want a limit or market order, and then the price. Where on a market order, all you have is the quantity, the stock, and the fact that you want to identify it as a market. So that's essentially, that's the market order, that's the limit orders. Those are the most common. The next kind of order type that I want to talk about is the stop loss. So you got stop orders. So let's say I've got a 2,000 share position here on AMD. I'm long on it. I'm long at 70. I can, there's two primarily stop order types. There's the stop market order and there's the stop limit order. Now, when it comes to stops, you've got a couple of things, it kind of depends on, what you're looking for. I have a tendency that when I'm using it as a hard stop, I will do a stop market order, because if it gets below that point, I want to get out of there. I might get unfavorable slippage, but at least I'll get out of the position. To where if you put a stop limit order is a scenario to where you have to identify a stop price. So let's say I said before I'm at 85.70, right? So let's say I want to make the stop at break, at 85.70. And then let's say the limit that I want to get filled at is 85.65. So that gives me 5 cents of slippage. So as soon as on the tape registers 85.70, the system is going to put out a limit order of 85.65 to sell. The risk with putting a stop limit order in place is that if there's a huge seller and so forth, it could totally skip. You might not get executed and still be in a position with the stock going downward. So that's why a stop market order is usually the most when you're trying to stay out. So if I want to put that 85.70, when I would do that stop market order, it would put that position out there so that as soon as it sees 85.70 or below on the tape, it will execute a market order to get me out of my position or out of the number of shares that I put. I might have 2,000 shares, but I can put out a stop order, market order of just a half my position. So let's say I want to put risk half my position 85.70. I might risk the other half at 85.60. I might give it another 10 cents because I have a couple of different targets and I'm looking for the right amount of risk to reward on each sets of shares. It's the same mechanism here on just the simple order entry. I can put this up to 1,000 shares. Stop market, I'm identifying the stop price at, let's call it 730. And then, of course, I would click sell, and that would institute an order. As soon as it saw 735.50 on the tape or below, it will issue out a market order to get me out of the position. What are some of the advantages of stop orders? I mean, obviously the huge advantage is that it takes the decision making out of you. If you're leaving it to yourself to stop out, let's say you have trouble doing that, putting out the stop order, it doesn't second guess it. It's an order, it's executed, it's ready to go. So you don't have any there's no pulling it back. The disadvantage of stop orders, a lot of people say, and I don't have any reason not to believe, but because of all of the paid for work order flow is that when you put your order out there, it is presumed that the market makers can see that, and sometimes with the manipulation of stocks, that they can see that. Now, the average retail trader is not trading the amount of size where I don't think the amount of volume that I'm trading, I don't think my stop order being out there is going to have any impact on the market makers coming down and hitting my stop and then spiking back up. Because who has that not happened to? If you've day traded, you've had your stop at 85.70, you go down to 85.69 and then spike to 90. I mean, it goes up 5 points. I mean, who hasn't had that happen? I don't know of anybody who's been doing this for any extended period of time who hasn't had that happen. So that's your stop order. Now, one of the order types that I think is less known about, or people don't understand as completely, is what I call here on Trade Zero, they're range orders. I love a good range order. So a range order is essentially a dual order. It's kind of on TD Ameritrade, it's kind of a bracket order. There's an OCO is order until canceled. So basically, essentially a range order. Let's use my example again, that 85.70 is my stop. And let's say I want 86 is my thing. So if I put out 1,000 share range order, it's going to put out two orders. It's going to put out a sell order, a limit order at 86 to only fill at 86. And then it's going to put a stop loss out there at 85.70. So if the stop loss triggers, it deletes the limit order for $86. If the limit order fills, it deletes the order for the stop loss order. So it cancels that, they cancel each other out. Again, a range order is helpful, especially if you have a strategy or if you have an idea that let's say you're shooting for 15 cents and you're giving yourself a 10-cent loss, right? So you've got essentially a 1-to-5 reward to risk ratio there. And if I did have that order out, I just would have just sold it at 86. So it would have sold it at 85.70, would have been canceled in that particular example. Again, I think range orders are powerful. So let's say I had a 2,000 share position. I could put 1,000 with a range order, with a low price at 85.70 and a high price at 86, and I could put another 1,000 with the same stop in 86.25. So I could, you could set multiple range orders at a time to take care of your entire position. Now, depending on how you your cost of commissions and those types of things, that some situations might be in a better example for you, but I definitely think that range orders can be very helpful. There are times, and I've got a different video on hotkeys, but there are times that I'll use a single hotkey for a particular stop loss go and a profit target. So if I'm entering in, I might quickly, once I get into position, I might quickly put out there a 4-cent stop with a 15-cent, target, depending on, what's going. And sometimes like 15 cents might not be I might just be shooting for 8 cents to 10 cents, but I'll put it out there and then cancel it and take my 10 cents. Why will I put it out there? Because sometimes they fly. And sometimes having a little bit higher target out there, when you see those spikes, you might get a partial fill and be able to get, to take advantage of some of those algo spikes. that come into play. So the last element that I want to focus on is conditional orders. Now, there are times when, and again, I know this might be different for some, but there are times when I have particular plays that I'm looking for. So, I'll give you an example. Let's say there's a stock sitting there, it's pre-market, and there's a stock that's trading at $5.35 at pre-market, right? It had a big day yesterday, and it spiked up to $6.25. It's now come back down. It's identified some areas of support, and then it spiked up a little bit during during pre-market. So let's say I noticed yesterday that it was sitting at 505 a number of times, and it showed support at $5.05. There are times when I see those types of continuation plays, and I would love to be able to get a fill around $5.05. I would love to see it dip at the open, go down to 505, show support, be able to buy that, and then be able to take advantage of a bigger play. So under that circumstance, so let's say that I want to do a buy order. Let's say I want to do 3,000 shares. I want to do a limit, and let's use my example of 505 before, right? 3,000 shares. I'm thinking that it's going to dip from 533 to 505. So that's the first order. A conditional order is essentially saying, hey, if this order executes, I want this order to be placed out there. So a good example of that might be that, let's say I want to, if this order executes, let's say I want to leave my desk, and I want to be able to put a stop loss in place. And I'm going to put the stop price at $4.95. So I'm going to give it 10 cents. I'm going to give those 3,000 shares 10 cents of space. Because again, if I saw it holding support at 505, maybe 502 to 505 range, if it gets below 495, it's not holding support anymore. They cut my loss. So let's say that's the case. And so what if I send this order, it's going to put an order out there for 3,000 shares at 505. And then if that order executes, it will then put out an order to sell 3,000 shares with a stop market price of $4.95. I find when I have these types of plays, I find conditional orders to be very helpful. Again, the advantages are simple. It allows you to put an order out there, and then be able to put another order out there. And it does the only caveat of the conditional order is that they have to be associated with the same stock. So you can't put an order out there for LQDA for 3,000 shares and put a conditional order for a different symbol. It's going to be on the same symbol. I wanted to kind of put this together. Hopefully this helps out. Again, this is a very specific to the TradeZero platform. It is somewhat interchangeable, I think, with some other platforms. Some of the concepts, they might be called different things. I'm likely to put together a similar video, on this topic as it pertains to the Dash Trader Pro platform. In fact, we'll be putting that together, this very similar video, and go specifically to how these actions look in the Dash Trader platform. So if you trade on Dash and you're interested in these types of execution topics, I'll be putting that video together here at some point. So you definitely look for that, on the channel. Anyway, so if you're interested and enjoy this type of day trading content, please hit that subscribe button. Please hit that like button if you made it this far. I definitely appreciate the support. Y'all take care.